Scott, good to see you. Surprising yesterday, I was talking to Tom Petrovsky about this a little bit earlier, that despite this lockdown in New South Wales, the ASX went up yesterday. How are you expecting things to kind of pan out while this lockdown is in place?
Pete, good morning. It is a slightly strange scenario, isn't it? Look, it's partly explained by the fact that our market fell almost 1% on Friday when it was obvious that the news was going to be bad. And so to some degree, it was already there. The US had another record day on Friday night, another record last night or overnight, our time closing this morning here. So to some degree, we are still riding that global wave. China is loosening or reducing its reserve ratio, in other words, making money cheaper for businesses and consumers in China. And so the broader macro numbers at a global level are still pretty good, and that's the wave we're riding. Of course, the local news is not that good. We know that lockdown's costing about $1 billion a week for New South Wales businesses. And we also know, of course, that, for better or worse, New South Wales is the largest state economically. And so that is going to have flow-on effects right around the country. Everything between trade, border lockdowns, passenger movements, tourism, the whole lot. It is going to continue to hurt for quite a few weeks to come, unfortunately.
And what do you make of what you've been able to pick up so far, Scott, when it comes to financial help that may well be announced today? It's looking like payments might be extended up to $600, but the proviso being that businesses do have to keep their staff. They can't shed any. How much do you think that will help? And plus, you've got mental health support that may well be coming as well.
Yeah, the support is really welcome, Pete. This is to some degree an extension, even an increase on what was happening in Victoria only a month or two back. And so absolutely welcome. We want businesses to be able to keep employees because we know from JobKeeper and JobSeeker back last year, the more people we can retain in jobs, the more businesses can retain where they are. They're off to for what we call a fast start, right? If you don't have to rehire people, you don't have to reinvest, you don't have to re-find a job, you're ready to go as soon as the starter's gun goes. And that's really what we're hoping for. And so the increased payments are absolutely welcome. I think they're absolutely necessary. Again, big government debt, big deficits. We're going to have to deal with that down the pike. But right now, the issue is keeping the economy moving, keeping the momentum up, because we know if it falls away, it's devilishly hard to recover. So that's really, really positive. It's still a big question about how it's implemented. And to some degree, the removal of JobKeeper meant that we're now doing ad hoc payments. I would have preferred to see criteria-based payments continue right through, which simply would have gone to zero as we got back to normal. And then as we started to see more cases, more lockdowns, that could have ramped up automatically. Those so-called automatic stabilizers would have been better, but this is a really, really good plan B. Hopefully it'll keep people in jobs. Hopefully it keeps businesses afloat so they can see the other side of the lockdown.
All right, Scott Phillips, good to see you.
Thanks,
Talk to you soon.